Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for July 1st through the 5th, 2019, first week of July. It was a very short week. We had a half day on Wednesday, closed on Thursday for the 4th of July here in the States. So if you celebrated, happy belated 4th of July to you. Now in today's video, we're going to be covering the four main indexes, the S&P, Dow Jones, NASDAQ, and the Russell 2000. We're going to take a look at stock futures, currently looking positive going into next week. We have job report here on Friday. Hit the markets pretty hard, but all the indexes recovered here towards the end of the day Friday. We're also going to be taking a look at the entire S&P 500 change for the week. What sectors were strong, what sectors were weak. Financials jumped pretty high this week, up some 2%. We'll take a look at the financial exchange traded fund there that I used to track that. We're also going to be taking a look at oil, silver, gold, bonds, and mortgage rates, which slightly uptick this week. So we will cover that in today's video. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I'm trying to hit 5,000 subscribers here by end of 2019. So that's a goal of mine. So if you have not set subscribe, hit the subscribe. I cover the stock market, dividends, real estate, personal finance. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions, drop them into the comment section. And let's go ahead and get into the video. I'm going to go ahead and flip my screen around now. We're going to go ahead and take a quick look at last week's changes for the week. It was June 24th through the 28th of 2019. Now, we came out of a positive in June 4th, going into 0.25% or 0.5% there. S&P 500 down 0.29, the Dow Jones down 0.45, the NASDAQ down 0.32, and my portfolio down 0.48. So overall, the indexes were down about 0.25% or about 0.5%. So no biggie there. It was a red week, and that was pretty good. A lot of investors were going into the weekend with the China-U.S. sort of interactions there. So it actually came out positive due to that, and that is why we had such a good week this week, which we will be covering here in just a second. So this week, the S&P 500, this is the CNN markets. This is showing a 5-day change of 1.65%. Now, every week, I go ahead and take the numbers of where the index is closed here. So last week we closed at 2941.76, and that was a negative 0.29% as we earlier reported. Now this week we closed at 2990 and 41. So my estimate was showing 1.64. The current here is actual 1.65. So these estimates are not for the full 5 days. It is actually this, it's not including Friday. So this is including Monday, Tuesday, Wednesday, Thursday, and Friday of a 5-day change of 1.65%, and that is accurate. So this week, the S&P 500 skyrocketed higher, up 1.65%. The Saturday event with the US and China went very well. The Fed also came out on Friday, I believe. It looks like it may have been after hours, saying that they're not currently looking to cut rates right now, but they're open to cutting rates in the future, which really elevated the market. There's currently about a 99% chance that the Fed will cut rates sometime in the future. They're saying about a 70% chance of a 25% cut, and a very low percentage of them are looking at a 0.5% cut in the foreseeable future. But this is very stock market positive, and we can see a just constant trend higher over the week. Even though it was only a very short week, we moved quite a bit. Now, Friday job reports came out that hit all the indexes here in the morning. About 10 a.m. hit all the indexes down, but every single one of them is going to show the same sort of track. It made a V pattern here. It went down, job report hit, brought the market down, and then it slightly recovered towards the end of day Friday, closing at some highs. Not all-time highs. That was on Wednesday, closing at all-time highs, but still very high up there. Year to date, the S&P is up 19.29%. So basically the same pattern here with the Dow Jones. High gap up on a start of the week. That is due to the trade talks, the good tensions between the U.S. and China. And Friday here, we can see jobs came out. The job details caused it to fall there slightly, recover towards the end of the day. NASDAQ basically the same movement, gap up on Monday, slow on Friday, recovered there towards the end of the day. Now, I didn't cover the change here. So the Dow Jones is up 1.21%. Year to date, it is up 15.41%. The NASDAQ is the winner this week, up 1.94%. It is currently still the winner year to date, up 23.01. The Russell 2000 came in last place this week. It is up 0.58%. This is currently in third place year to date, up 16.84. Currently, the NASDAQ is in first place, followed right behind by the S&P 500, then the Russell 2000 at 16.84, and then in last place, currently of the four main indexes, is the Dow Jones, up 15.41. Now, currently, stock futures are looking positive going into the following week. We can expect maybe another green week, a continuation. I'm not sure how much is to be expected. I know last week with the media attention that took place over the weekend, going into the 4th of July weekend, it was very stock market positive. So I know a lot of investors were jumping on board and getting invested. So here, basically a little report here that the Dow Jones did get hit initially on Friday due to falling on strong jobs on a strong jobs report, but then recovered towards the end of the day. Now, S&P 500, you can see here on Friday, healthcare got slammed. I forgot what the regulation was out there. I know President Trump was the one that was targeting the healthcare sector. I haven't read too much into it, but I know they were hit due to something within that sector. I really need to read into that. But you can see EA and Activision there, also negative. Activision down 1%, EA down nearly 5%. Basically across the board, the S&P, all the indexes here were negative on Friday, and that was, just across the board. Really, no specific sector was hit. Not hit. The financials did still do pretty positive there. Now, 1 week change, we can see basically we were across the board up 1.65 to nearly 2% for the three main indexes, and across the board you can see technology, services, basic materials even were going with the flow of the market. Not as highest performance here as Google up 5.21% this week, Facebook up 3.64, Apple kind of losing a little bit of steam here around 203, 204. I would like to see probably, a couple investors I know have been taking profits now at 204, 207 is where they're taking profits. I am not holding a whole lot of, I'm still hold Apple, I suppose. I do hold Apple, but I have bought quite a bit, 4 shares or so of Apple or of Google and a few other positions here this last week. I know I picked up a financial I covered in my Monday video over within the financial sector. I own JP Morgan and a few others, I believe, here within the sector, all doing very positive this week. Utilities also jumping up nicely. I know they have been performing fairly well for the year. If we take a look at the year-to-date performance, if we just select here year-to-date, this is FinViz, by the way. If you guys haven't checked out this website, it's a great website to look at the performance of the sectors by the week, by the year. It's just great. You can see year-to-date, Google is up 8.39%. A lot of this is just within the last few weeks. They have been down, kind of pushed into the dirt these last 4 months of the year. Earlier in the year, and they just recently started to kind of bloom and pop back higher. Facebook is up nearly 50% year to date. Amazon 30%, Apple 30%, Microsoft over here 34.9%. See financials starting to perform really well here. JP Morgan up 16.29%, Bank of America up 18.75%. Just really healthy market right now. AbbVie down there is down 20.83%, and Biogen Inc. down 22.16%. You can see a couple of these pharmaceutical and biotech companies were slammed recently hard. Kraft Heinz, we already had that sort of, I know that was out in the news quite a bit back in the past. I'm not sure, I haven't been tracking this one all that much. I know some investors who dove into it below in the $30 range, and you can see it's still getting hammered. So there's really, I'm not sure if it's hit a bottoming out point. It's not one that I have been tracking myself, but overall, really good performance here year to date. Now financials, we already saw financials across the board are pretty positive this week. The financial ETF I used to track it is XLF. We can see this is up 2.03 year to date, up 18.22%. Next is semiconductors. A lot of the NASDAQ tech stocks I like to track this one. I like to track semiconductors and financials. Those are what's going to move the market. The tech stocks and the financials. Some of the other sectors within the S&P 500 help balance out the market. The market moves. But if the techs aren't performing, the financials aren't performing, you're not going to have a positive market. It's either going to be kind of stagnant, trending sideways, or it's even going to be a little bit weak. So I like to watch those two sectors there. Home builders up 0.94% for the week, 29.37 year to date. Oil this week is actually down. If you guys want to take a look here at the news, oil got slammed. Now this is saying oil prices were steadily on Wednesday after a steep fall in previous session. But if you want to just stop, pause the video, read through it. Oil increase, OPEC's supply cuts until March. Looks Tuesday where oil was slammed hard here, down 4.72%. This is a huge hit. I know Exxon, Chevron, and other oil companies were hit hard this week. I wasn't tracking the markets all that much. That is why I like to do these recaps, because this week was a pretty, I was off all this week, but I was not watching the markets. I didn't post a whole lot over on Facebook as I normally do when I'm at work, or I didn't really go out there and look at my portfolio on a day-to-day basis. I was off hanging with my kiddo, hanging with the wifey, and I just enjoyed this week off from it all. Still posted here on YouTube, but besides that, the dollar this week, pretty steady up until Friday, then a huge spike here on Friday. So pretty steady throughout the week, Monday, Tuesday, Wednesday, Thursday, and a huge spike up here. This is maybe due to the job report, but we can see here that as of open on Friday at 96.76 and then closed right at 97.17. So we almost hit some highs up there, almost in that $98 range. I know year to date it has broke into the $98 point at some points here, 98.20. 98.17. So it looks like the high here is 98.20. This should help out the Russell 2000. So the Russell 2000 hasn't been performing as well as the other indexes here just in the recent few weeks. So in the upcoming weeks, we could see some movement out of the smaller mid-cap companies and the Russell 2000 in comparison to the S&P, the Dow Jones, and the NASDAQ. So that's something I'm kind of looking forward to, seeing some more performance here out of the Russell 2000. Silver and gold hit hard this week, not 2% on silver, down pretty hard. Here on silver, you can see a lot of that loss here is on Friday. Now gold not hit as hard as silver, down 0.8%. We can see silver is almost back below that $14 point. So it likes to, anytime it falls below 14 bucks, you'll see it get bought up around 13.50. It'll kind of get brought back up into that $14 range. But silver and gold currently is not looking positive as the Fed is coming out here and sort of backing the support. They don't want to see the markets fail. They want to see the current markets continue to move forward, continue to be positive. So I don't see gold and silver doing as well here in the short-term future. Bonds are also down this week, down 0.34%. A lot of investors who had moved towards the bond market earlier this year to avoid risk out there have been, they've had some performance, but what is 4.52% versus 19.29, 15.41, 23.01, or 16.87. If you moved your portfolio to be 50-60% in bonds because you felt like the market would not perform well, we would go into a recession, you missed out on quite a bit of performance. Yes, you have safety, but now your portfolio has slagged behind. Now, if you're getting FOMO, fear of missing out, and you're wanting to kind of jump back into the market, you are currently entering the market at all-time highs. If you're buying the index, you're buying it at all-time highs. This may be the best opportunity to look for stocks that might be adding value and then add slowly positions into your portfolio. If you in a few sectors out there that haven't performed as well as the total market, could be in the financials. A few financials out there haven't, they're positive year to date by quite a bit, but overall they are still at what could be considered a value. Also taking a look at some of the healthcare companies, oil and materials, and also communications. Take a look at those sectors and see if anything in there has piques your interest, and then do your fundamentals, do your calculations, and make your investments. So Currently, market rates have increased by 1 basis point. So last week we had a basis point there of a percentage there of 3.94. It moved 1 point up this week at 3.95. I saw a few investors over in the Facebook groups discussing refinancing their mortgages on their rentals, or they're getting mortgages on their rentals, and they've been getting some pretty good rates. I've seen, yeah, I kind of covered this last week, but they're getting rates of around 3.75. So this is really good for them and other investors. Now, with that said and out of the way, we have covered the majority of what I wanted to cover. I really didn't post a whole lot this week as far as on my Facebook page. I did post my Monday buys. I continue to average down on Avi into the $70 range, Caterpillar at 136, and I added a new financial, Eaton Vance Corp. It's an asset management company. I will probably be buying more of this specific company into the future because I feel it is at a value opportunity, and I want to continue to buy up and add to my financial sectors here. And got a couple comments there of other investors are choosing to currently sell versus buy, but of course I am buying into what I see as value. So right now I'm not buying positions at all-time highs. I'm looking for buying opportunities at what is considered either a value or what is currently negative in my portfolio. I also had about $10 of dividends paid out last week, which is tracked there: Main Street Capital, Lockheed Martin, and Digital Realty Trust. I also liquefied my Marcus account. So if you haven't followed me, I made a couple videos a while back, maybe a year and a half back, of moving into high yield savings account. I initially started with Marcus. I think they were offering a rate about 1.05, then went to 1.35, then 1.75, then 2.05, then now 2.25, and now they recently cut rates. So Marcus cut rates of 2.25%, Ally cut rates from 2.2 to 2.10, and a few other institutions have done the same. Now, on the other hand, Wealthfront bumped up their rate. They were at 2.51. They bumped up their rate to 2.57%. So that caught a lot of attention. I've seen a lot of YouTubers. I've seen a lot of people posting over in the FI community, the dividend community, my communities here. I have several groups here that I'm a part of and that I have created. I have two groups specifically: the financial investor dividend growth investing and financial investor real estate investing groups. And these are communities that I'm trying to build up to discuss either dividend growth investing, stock market overall, or real estate investing, and just kind of build these communities. But Wealthfront has been the talk of the town, and I have fully liquefied my account over here. I was making a 2.15 now because they dropped my rate. Guess what? I liquefied my account and I moved it all over into Wealthfront. So if you guys want to check that out, I will have a link down in the comment section. If you guys would like to check out Wealthfront, they are offering a 2.57%. I also wrote up a review here of Webull. I use several different platforms from M1 Finance primarily. I use Merrill Edge, Robinhood, and Webull, and those are my primary brokers that I use actively. So I wrote up a review. I'll be doing a review. I have a couple articles on M1 Finance, but I'll be doing a full review of M1 Finance. So do you guys invest in your 401ks? Let me know in the comment section below. Does your company have a 401k? Do you actually partake in your 401k? I went ahead and did a snippet of my own 401k. I went and took a look at how much I am paying in fees in my 401k, my Roth 401k at work. Is it worth it to be investing in your 401k? I get a match for my Roth 401k. It is 100% worth it for me. I get a match. I also get access to a Roth 401k, meaning that any sort of the deposits that I make currently at 59.5, I can always invest, or I can always withdraw it all completely tax-free. My capital gains, my dividends, my interest, 100% tax-free. Also, I can roll this over once I leave my company after 5 years, because I'll get that whole 100%, whatever it is it's called. Every year you get a percent of their match. After 5 years, if I were to quit my company and move somewhere else, I could roll my Roth 401k 100% over into a Roth IRA. After 5 years of sitting inside my Roth IRA, it would count as a contribution which I would be able to withdraw prior to 15.5 if I really wanted to, but in this case I would probably not. I would just kind of add it in there. So I created this post. I'm up here today about 19.41% as of the 1st of July. So this week makes it another 2% there tacked on. I'm up right there with the S&P 500, up some 21% year to date, just off my Roth 401k. So this is a great platform, account to be using if you have access to it, if you have a match. So I did write a couple questions in there. If you guys would like to check out that post, follow me on Instagram. I post a whole bunch of information over on Instagram about my Monday buys. Every Monday I post over on my Instagram. So if you guys haven't checked that out, definitely check that out. I try and include different snippets of the week, fun little activities that I find. So definitely follow me over there. I went over my dividends that were paid out for June 2019. I was paid over $81.14 from all the dividends across the accounts. Very good month there. Besides Wealthfront, I also signed up for SoFi. Let's go see if I can zoom in. This makes it a lot easier, I guess, for you guys on your mobile devices. So I signed up for SoFi. Now, it's not as good as Wealthfront as far as the interest rate. They offer a 2.25, which is what Marcus was offering. Now, what I signed up for is that they offered a $50 sign-up bonus if you funded the account with $100. So what did I do? I went out there, I created an account, and I funded it with $100, and that got it started. Now, this week's changes for the week, we have the S&P 500 up 1.65%, the Dow Jones up 1.21%, the NASDAQ up 1.94%, and my portfolio up 2.18%. So very good performance across the board. My portfolio was increased due to Google, my 4 shares of Google that I recently bought. And we can see here Google was up nearly 5.21% this week. So overall, really good performance there. And that's what kind of pushed my portfolio slightly higher over the indexes there. So I kind of posted that over there. And that is primarily it for today's video. I know I posted a screenshot of the snapshot here as far as having created the account. So here I created an account, I posted it. For the SoFi, if you guys are interested in getting $50 for free, I will have a link, an affiliate link down in the comment section below. You sign up, you deposit $100, and you get $50 for signing up. That's a really easy way to get $50 right there. 50% return on your deposit, basically. So I made $150 there, really easy. So if you guys want to check that out, I will have a link in the comment section below. And all I wanted to cover in today's video, and so if you guys did enjoy this video, again, hit the thumbs up. I would really appreciate it. If not yet subscribed, hit the subscribe. I cover the stock market, dividends, real estate, personal finance. And of course, let me know in the comment section, how was your performance for the week? If you guys want to go ahead and share it, what stocks are you buying? And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.